My special thanks to Zoho for keeping a webinar on one of the most important topic, recent one, that is budget 2021. Let us have understanding on the very important key adjustment, key changes which are proposed in recent budget 2021. The budget was announced on 1st February 2021 and it was being referred as never before circumstances budget. Why never before? Because we understand that the COVID-19 has a huge impact on the businesses. The government has spent crores of rupees for the purpose of this pandemic. Now, it was expected before budget that because of the huge expenditures spent out by the government, the fiscal deficit is very high, and there may be a few kind of cess like COVID cess that can be levied on the taxation of personal and corporate. However, good news, there is no COVID cess, there is no additional tax burden as far as the companies and individuals are concerned. The fiscal deficit for the year 2020-21 has been pegged at 9.5%. And when you look at the budget, both personal and corporate income tax is expected to rise by 22%, and even GST collection is going to be rise by 22%. Now, this is primarily with respect to the widening the base of the taxpayers. So instead of focusing on collecting higher tax from the person who are tax savvy, the focus of the government has been primarily to increase the number of taxpayers, and then it will help to get more revenue for the government. Now, let us look at basically the very important announcement as far as income tax is concerned. Before that particular point, I just take one thing. Don't tell me what you value. Show me your budget and I will tell you what you value. So budget is nothing but it just provides you the how the government is thinking, how and which are the things which have been valued more. So the activities, the projects for which the amount has been allocated on higher sides, that is the main thing where it values more. When we look at the direct tax and GST both issues, the primary objective of government is to ensure that somebody who makes issues or they try to evade the tax, they need to be penalized more than the person who is tax savvy, who has been paying as an honest taxpayers. So the first thing let us look at is no deduction if delay in deposit of employees contribution. I think there has been a dispute for so many years, and in case of Vinay Cements Limited, Supreme Court observed that even if the employee's contribution of PF has been delayed in deposit, there is no issue with respect to the its allowance for income tax point of view. However, there has been always a cause of concern for department and assessee about allowability of these things wherever the contribution of employee provident fund has been delayed by the employer. Now, what happens then in certain cases, the companies or employer use the fund of employees' contributions for the business, and they make delay to the particular delay to the contribution fund. This has been taken as a very critical thing by the government, and in this budget, it has been clarified that in case of delay in deposit of employees' contribution, it will not be allowed as deduction. So, for example, if there is a single 1 day delay, then 30%, if you are the 30%, 25% tax break, then that particular amount will be disallowed and there will be a huge burden. So the focus of government is to ensure that please be vigilant as far as the money of employees concerned. That is not your money. You will just cast a duty to ensure that you collect the fund and deposit on time to the particular fund. So this is one change which is very important for businesses. Second very important thing is on TDS on purchase of goods. Now That particular change is on other side of the recent TCS provisions which has been brought out under section 206C1H. Last year, the tax collection TCS has been introduced for the assessees having turnover of 10 crore or more, wherein it is mentioned that in case if of the sale of goods to a one party where the amount aggregates is more than 50 lakhs rupees, then TCS is required to be done. So that the obligation was on the seller party, where TCS required to be done by that particular party. Now, under this budget, the obligation has been cast upon the buyer. So it is applicable to the buyer where having turnover in excess of rupees 10 crore. So for example, if you are having a turnover of rupees more than 10 crore rupees, then you are supposed to look at the TDS and TCS. TDS in case when you are when the purchases is more than 50 lakhs rupees, and TCS when your sale to the customer is more than 50 lakhs rupees, right? So this particular provision says that you need to do TDS where the amount of purchase of goods from a single party is aggregate during the period is exceeding rupees 50 lakh. In that case, the TDS obligation arises on either the accrual or payment, whichever earlier. So even if you pass general entry in your books of accounts of amount payable to the supplier, then if it is earlier than the advance received, in such case, what will happen that you will pay a TDS on earlier of the payment or the amount credited in the books of accounts. So that is the obligation cast upon. Now what is more important thing in the previous year? So if you are talking about this provision is effective from 1st July 2021, and basically that provision says that in case in the previous year you are having a sales of more than 10 crore, then you would be cautious. Look at the provisions, look at the parties where your purchase is more than 50 lakhs rupees, and any amount in excess of 50 lakhs rupees, TDS need to be done at the rate of 0.1%. If permanent account number PAN is not there, in that case 5% will be levied, right? So applicable to only in case your turnover is 10 crore, more than 10 crore rupees. TDS to be done at 0.1%. PAN is not there at 5%. This is what the requirement. Now the question will come into mind that on a one transaction, TDS is applicable and TCS is applicable because buyer and seller, they both are having turnover of more than 10 crore rupees. Now in that case, whether I will do TDS or TCS or both to be done on one transaction. Now the response to that in the section of TCS, it has been mentioned that if the TDS is applicable, then TCS is not to be done. So the in where both buyer and seller having a more than 10 crore turnover, they are covered in the sections, and the value is more than 50 lakhs rupees. In such case, the obligation of TDS is lying on the buyer under section 194Q. So section 194Q, TDS will be leviable even when the both are covered under TCS and TDS. I hope this issue is clear. This is one of the very important thing which is required to be really known and understood by the staff and the businessmen, just to ensure that TDS obligations have been properly complied with. Let us look at next point on TDS TCS. Now here it says that higher TDS or TCS for non-filer of income tax return. Now, for example, if the TDS, so it says that aggregate of the same deductee is more than 50,000 rupees or more in each of the two previous years. I am making a payment. For example, professional consultancy payment, I am making you a consultant, and for continuously last 2 years. when the TDS is done, the TDS is 50,000 rupees or more. So 10% is, for example, the TDS rate. 5 lakhs rupees or 6 lakhs rupees has been paid, and both last 2 years, 10% TDS is done. 50,000 rupees is a TDS which is done in last 2 years, and the consultant is or deductee is not filing income tax returns. In such case, the obligation is cast upon to deduct TDS at the higher rate. Now, higher is what? A TDS at higher A of twice the rate specified in the Act, or the twice the rate in force, or 5% higher of any of these three. So in the example which I have taken, where it is a 10% TDS, 20% will be applicable. In case of 184C, where it is a contractor 1% TDS, it is 2% or 5% higher, so it's 5%. So this is the way you will look at the TDS rate applicable. Now, the question will come to mind, how can I know that whether deductee has paid or deductee has filed ITR or not? Now, for that, it is proposed that the income tax department will be able to start with a utility on the portal, wherein once you input the permanent account number, then it will provide the compliance or non-compliance of income tax return filing. So again, just to summarize here, one very important thing is that it is applicable in case TDS, which is deducted, is a 50,000 rupees or more for the same deductee. Second thing, only when the deductee has not filed continuously for last 2 years, and the 50,000 rupees is also for the 2 years, then you need to have at a higher TDS rate. So this will help government to trace the persons, even though we have been done TDS of 50,000 rupees, they are not filing ITR, and then they can look at it and scrutinize further. So we need to be careful about these provisions again. Let us look at the next bunch of the reduction in the time limits for sending intimation notice. Now, section 143.1, 143.2. 143.1 talks about a time limit for sending intimation, and 143.2 talks about a scrutiny notice. So earlier the period was earlier period, the 3 months has been reduced. So as far as sending intimation, so when you file the income tax return from CPC, you receive intimation. So that receipt of intimation should be within 12 months from the end of financial year. Now this has been reduced to 9 months. Same way, if for issue of scrutiny notice, it was within 6 months from the end of the year in which the return is furnished, that period is also reduced to 3 months. Now let us take an example. In case of income tax return for assessment year 2022-23, which has been filed within the due dates. Now, earlier it was 31st March 2024 was the last date for sending intimation. Now it has been reduced to 31st December 2023. And as far as scrutiny notice is concerned, earlier it was 30th September 2023. Now it has been reduced to 30th June 2023. Let us look at the next point, is a reduced time limit for belated or revised ITR. Now, earlier case what we talked about was the requirement with respect to department to issue notice, department to issue intimation. This has been reduced by 3 months. Same way, they also reduce the timelines for the SSC for filing belated or revised income tax returns. So earlier the case was there that you need to file belated or revised return within 12 months from the end of financial year or before the completion of assessment, which is earlier. Now this has been again curtailed by 3 months. So 3 months has been reduced for filing of belated revised ITR, and 3 months has been reduced for giving intimation or and by issue of scrutiny notices. So that is what. So the focus has been primary to basically reduce and curtail the timelines for the purpose of the hanging the assessment or hanging procedures for a particular year. Now, next very important point is on reducing time limit for reopening assessment. Now, for reopening assessment, earlier the year was like 6 years and 4 years. Now that 4 or 6 years, as per the case may be, this has been proposed to reduce to 3 years. Now here the focus was primarily that basically why to keep it hanging. Reopening should not be done for a longer period unless until there is a specific case of income escaping assessment for a higher value. For all other cases, you have to be very sure about the completion. So 3 years, once 3 years is completed of your assessments is completed, then you don't need to worry about that. So that period has been reduced to 3 years from the end of relevant assessment years. However, only in case of certain cases where the evasion evidence of value of 50 lakhs or more has been noticed or has been done, in that case it can be reopened for 10 years with the approval of the specified authority like principal CIT. So it want to make it very clear that if your assessment is of your ITR or the income which is covered is less, don't have to worry. 3 years completed, there's no need to worry about that. However, there is some kind of income escaping assessment with higher value of 50 lakhs or more, then the possibility is there that it can be reopened for 10 years. So as far as somebody who is involved into the evasion things, the time limit has been extended to 10 years, and in all other cases for genuine cases, genuine hardship, small taxpayers cases, it has been reduced to 3 years. So you don't have to worry about more than 3 years as far as your ITR which is being filed. Again, a new section has been introduced here, section 148A. It says that the procedure to be followed for issue of notice under section 148. So wherever you do issue notice for reopening assessment under section 148, it says that you have to follow the due process. You need to first issue a notice, show cause notice to the assessing. You need to get a reply, and after receipt or reply, then only if it is not appropriate, it can be issued notice under section 148. So this is what is as far as the requirement of reopening is concerned. Now when I look at the both the things together about the filing of belated revised ITR, then it is reduced to 3 months. As far as intimation is concerned, it is again reduced by 3 months. And as far as reopening assessment is concerned, one of the very important thing is that there is no need to worry about the litigation which can come in picture as far as 3 years has elapsed from the end of relevant assessment year. Now, next very important point is on tax exemption on Eulip proceeds. See, as far as we are aware that unit linked insurance plan has been one of the most important tax incentive as far as the Eulip is concerned, where it's mentioned that it is a tax free irrespective of the premium limit earlier. So it was a case where it mentioned that there is no cap on the Eulip premium, and whatever amount has been there, the all amount has been tax free irrespective of the limit. Now what has been done that it has been proposed that Eulip that are taken on or after 1st February 2021, in that case the maturity proceeds of policies with annual premium of more than 2.5 lakhs will be taxable at par with the equity linked mutual fund scheme. So now no more exemption without limit. The exemptions on ULIP will be there. However, it is only for the small and certain cases only. That is where the annual premium is up to 2.5 lakhs rupees. Wherever the annual premium exceeds 2.5 lakhs rupees, then for the excess amount, it will be a taxable, and it will be taxable as far as a 10% taxation without taxation, without indexation. So that is what has been proposed here. but with the one caveat that in case if the amount is received on the demise or the death, then either the sum assured or the process of investment which is higher, then the nominee is not subject to be taxable. So, except in case of the death and the receipt of the money by nominee, if the per annum annual premium exceeds 2.5 lakhs rupees, then for the excess, tax need to be paid as per the normal equity linked mutual fund schemes. So one need to be very cautious as far as the Eulip is concerned. Just look at your portfolio of Eulip, and then based on your annual premium, you need to take call whether you want to make investment higher or not. Next very important point is that as we if you look at the government's focus has been primarily to reduce the tax litigations and to ensure that the small amounts, small litigations shall not go at a very high level, and it should be reduced as far as possible. So one new thing which has been done is that is constitutions of a separate dispute panel. So separate dispute resolution panel or committee DRC will be constituted, and that constitution is only for the purpose of the small taxpayer. Now the small taxpayer has been defined as a taxpayer where having an income up to 50 lakhs and a disputed income up to rupees 10 lakhs. So in that case, it has been clarified that you don't need to look at the more litigations and every way where you go from here to tribunal and other way. You don't have to worry about all these things. Your dispute will be resolved at a smaller level, by just a committee which is separately being notified for a small taxpayer, and then it will be taken care. So that is a new change, a new committee which has been introduced for this point of view, and I'm sure that this will really help to resolve the number of issues which are unnecessarily going and staggering at the higher level. And if it can be resolved at the smaller committee, then the disputed cases at a tribunal level, at court level, will be completely drastically reduced. Next very important point is been as just to see that the fake invoice, anybody who is involved in the fake invoice, see look at the provisions to curtail the fake invoice, whether it's GST, whether it's income tax, everywhere. Somebody who has been involved into fake invoice thing, then everybody who is connected with that, they've been penalized strictly. Government has identified over the period that one of the big issue which government has faced is the loss of huge revenue due to fake invoices. So when we look at the GST, in GST also the input tax credit, there is a lot of restrictions on claiming input tax credit. Why? Because government doesn't want to pay you money if somebody has not paid the government. Same way here, again they want to say that in case of the fake invoice where the value of penalty likely to be rupees 2 crore more, provisional attachment can be done. So that is again giving a power to the officers that where it has been involved in this case, you can provisionally attach the assets of the person who are being involved here in this case. Now, one very important point which is on depreciation on goodwill. See, this has been a disputable case for so many years. In case of Smith Securities Limited, the Supreme Court said that the depreciations on a goodwill shall be provided because the value has been reduced over the period. Now, this has been always an issue for the government, and department doesn't want to really agree with the concept that somebody can claim depreciation goodwill. In certain cases, what has happened that certain companies have created goodwill by way of merger, amalgamation, reconstruction within the particular structure, and then goodwill is created. A goodwill has been written off by 25%, and then there the tax has been reduced. Now this has been manipulated in certain cases, and wherein the depreciation on goodwill was claimed, and that's why the government was receiving less tax collection. Now, just to sort it out these particular issues, what has been proposed that now, irrespective of anything, not no goodwill will be allowed, or no depreciation on goodwill will be allowed with respect to goodwill that arises on merger, acquisition, or amalgamation. So this has made the point very clear that now onwards you cannot count that goodwill which has been arising on that, it will be subject to depreciation, because earlier it was not specifically mentioned under Income Tax Act. However, now it has been clearly mentioned under Act. There is no ambiguity left, and that's why now onwards you cannot claim depreciation of goodwill. Second thing, no one should plan in such fashion that it result into goodwill which will be available as a deduction, because this particular benefit which is available earlier, now that particular loopholes has been blocked, so that to ensure that no unnecessary or unjustifiable things will occur as far as the claiming of depreciation on a goodwill is concerned. However, as it is mentioned here that the cost of acquisition of acquired goodwill is to be allowed for computation of capital gain on consequent sale. So when you sell in tomorrow, the cost of acquisition will definitely include the amount of goodwill, and that goodwill or that cost of acquisition including goodwill will be allowed as a deductions for the purpose of computation of capital gain when you make a subsequent sale. However, you cannot get the depreciation on the goodwill. Now, one very important thing is about on tax audit limit. Uh, a year back, the tax audit was that if you are having turnover of more than 1 crore rupees, then the tax audit is leviable. Last year budget, they increased the limit of tax audit to from 1 crore to rupees 5 crore with the condition. So one important very thing, it is not to all the cases. However, the government wanted to say that if you are giving importance of digital, and if your businesses and accounts are more transparent, how it's possible when your receipt and payment, they both are through digital way, then in that case, if it is your cash receipt or payment is up to or less than 5%, then in such case you are eligible, that you are not required to do tax audit for a turnover limit of 5 crore last year. Now from the current year onwards, and this is applicable from the financial year 2020-21, that if your turnover limit is up to 10 crore rupees, and if your cash receipt payment is less than 5% of total receipt payment, in that case you are not subjected to tax audit. So government wanted to give these relaxations to the small associates, provided your accounts are transparent and entering into the digital way. Non-cash business or receipt payment is one of the more important evidence which suggests that the accounts are transparent, and you are eligible to get the very important benefit of not requiring a tax audit. Now next very important point is on basically interest on loan for affordable housing. See, Section 80EE provides a deduction up to 1.5 lakhs rupees in case if you take a loan for affordable housing. Now, this particular thing basically it says that this was about to complete by 31st March 2021. This has been extended by one more year. It says that even though loan is sanctioned up to 30th March 2022, and if the loan has been taken for affordable housing project where the value is less than up to 45 lakhs rupees, and the home loan is taken up to 30th March 2022, loan is taken from bank or financial institutions, and then in that case interest on such loan up to 1.5 lakhs rupees is allowable as a deduction. Now one very important condition which I would like to add here is that the section also has a condition that you should not own any residential house property on the date of sanction of loan. So the date on which the loan is sanctioned, on that date he should not own any residential house property. If that condition is fulfilled and other condition which I mentioned has been fulfilled, then you are eligible for the interest reduction up to 1.5 lakhs rupees, and that benefit was to be expired on March 21. It is extended to by one more year of March 22. Now, same way, there is again a extension of 1 year. Now, why this extension? Because I think the 1 year has been basically already gone. If you look at from our own life or business, in many of the cases, the 10 months, how the 10 months has lapsed because due to COVID-19 is no one is aware about that. That is the reason why this has been extended further. And again, the benefit, if you are startup registered, you get income tax benefit of 3 years exemptions. So that tax holiday period benefit is again has been extended up to 1 year. So even though your startup has been incorporated up to 31st March 2022, still you are eligible to get that particular benefit. Another thing, the capital gain exemption for investment in case of transfer of residential house property and investment thereof. That exemption was also being going to be out by March 21, extendable by one more year up to March 22. Now let us look at the few more important changes which have been proposed. Faceless IT. I think everything is going to be faceless, whether it is at appellate level or at higher level. I think except High Court, everything is now faceless. Assessment faceless, ITIT faceless, appeal faceless. So basically, this is the way the government wanted to work. So it will. The object is to ensure that any issues or possibility of the wrongdoing need to be eliminated. Human intervention as possible should be reduced or eliminated. Who is a part of committee, influence of the committee, they all should not be given weightage. That only the fact of the case matters. So faceless ITAT is a step forward for that. Very important thing, when the finance budget was started, one of the most important first adjustment or policy change was there, that senior citizen will not be required to file ITR. However, please ensure that that is subject to the conditions. One, senior citizen above 75 years of age. Two, the senior citizen having income from pension and bank interest. Third, the both pension income and bank interest from the same bank. Fourth, the bank need to compute TDS as by going through all chapter 6 and deductions, and thereafter TDS to be done. So the duty is cast upon the bank to deduct TDS after considering all the deductions and the bank interest income and pension income. So this is what is subject to many conditions. So how far it is practicable, how it is going to happen is not sure, but yes, the focus has been to see that the senior citizens, if they fulfill these conditions, then they may not be required to file ITR. Another point which was on dividend. So earlier was that even if you receive dividend in the last quarter of the year, still it is a part of the income, and you are supposed to pay tax from the first installment of advance tax. Now the question was that how can I know that I'm going to receive dividend in the last quarter? So how can I be subject to interest for shortfall of advance tax if the dividend has been declared later on? So that particular point has been resolved and made it clear that in case the dividend has been declared later on, so your declaration of dividend to be computed as a date from which you are required to look at your advance tax installment, not before that. Settlement commission has been discontinued, and there will be another board, interim board of settlement will be done. Next point is a pre-filling of details while filing ITR. See, government has many informations, and every information, whether it's a CB, bank, demand, they all are available. So many information of yours will be pre-filled when you file your ITR. This is the way the all information will exchange across various servers and various agencies, and that will be pre-filled. So your filing ITR will be much more easier than earlier. Next point is on there's a LTC leave travel concession cash scheme. So because of COVID-19, in certain cases will happen that the people have avoided travel. Now in that case, how can they get benefit of LTC? So that LTC cash allowance has been come subject to conditions. One, that the purchase of goods or services attracting GST at 12% more to be purchased. So like whatever may be your LTC, you need to purchase of goods or services, and that goods or service should have a 12% or more. Payment should be done through the banking channel, and you have to submit the invoice of the purchase of goods or services to the employees. So GST of 12% or more is required when you make this kind of payment, and then the purchase should be done between the period of 12th October 2020 to 30th March 2021. So that is what has been basically talked about the LTC cash scheme. So in case leave travel is not be able done, you can do by way of the purchase of goods or services where GST is at the rate 12%, and then you can claim the exemption for that. ITR for because partners, if you're a partner of the partnership firm is subject to the transfer pricing, then your due date has been proposed to 30th November instead of normal case. Presumptive taxation, section 44 ADA talks about the presumptive taxations. Now it has been made very much clear that this presumptive taxation shall not be applicable to limited liability partnership, because under LLP Act it already talks about maintenance of books of accounts. Therefore, the LLP has been kept out of the presumptive taxation provisions of section 44 ADA. Now let us look at the quick overview of the GST proposals. Right, the first and very important thing is that on ITC restrictions, I think as I discussed during income tax point of view, that one of the most important issue for the government is the fake invoice. And just to curtail the fake invoices, a lot of changes are having happening, whether it's a provision attachment penalty, or in all the cases the government has been very strict as far as the GST fake invoice is concerned. Now one of the conditions has been fulfilled for the claiming of input tax credit. Now in case of input tax credit, again it says that basically it can be available only when the details of such invoice or debit note having furnished by supplier in the statement of outward supplies and such details have been communicated. So if you want to claim input tax credit, first condition was that you should have a documents in your possession. The duty paying document like invoice, debit note are in your possession. Second very important thing is that the goods or services are received. Third important point is that the tax actually is paid to government. Again, that is again dispute by a lot of associates in court. However, the third point says tax is paid actually to the government. And fourth condition is that the return has been furnished under GSTR 3B. So these four conditions will be critical for you to claim input tax credit. Now, along with this fourth, one more condition is added. It says that you should have filed GSTR1. So GSTR1 has been filed by that particular supplier, and only when it has been filed, then only you can claim input tax credit. So that was the point. So you need to look at that from whom you are purchasing. That particular supplier has filed input GSTR1, and once it has been filed in GSTR1, it has been reflected in your GSTR2A. So this is one more condition, and because of this one more condition, we can say that you can claim input tax credit only when it is reflected in 2A. Earlier, it was said 20% variation is okay. Then they changed to 10%. Then it changed to 5%. Now it is very much clear with this that whatever is reflected into a, that is only you can claim as per this particular provisions. Next important thing is that GST reconciliation, GSTR 9C, GST audit. This has been dispensed with, and now the self-certification has been added as one of the very important point. So relaxation from the GSTR 9C of like certification by the chartered accountants of cost accountant is now not required. Third point is on interest. Interest to be paid on what? Whether it is to be paid on the gross amount or net amount. This has been the issues burning issue for so many years. Now Previous release was issued in last year that GST interest you to pay only on net interest basis, and now it has been done by law. So under law, it has been made it clear and retrospectively from 1st July 2017 onwards, interest is to be paid only on net cash basis. So if you are to make payment of 100 rupees and basically if 30 rupees is your input tax credit, then only on 70 rupees, which is the amount of shortfall to the government, on that net amount only you to pay interest, not on gross basis. Next points are basically on seizure and confiscation of goods and conveyance in transit. There has been two sections. Now, what is done that they both sections have been dealing. Section 129 and 130. 129 was on for in transit. 130 is on confiscation of goods. They both have been dealing. Second very important thing is that they made it very clear that the transporter to pay penalty under section 129, that is what is being clear. So here what happens that even though the supplier has closed his obligations, but the case against the transporter may continue. So that is what has been made clear under next point. uh, Self-assessment and tax and recovery. This says that if the liability is declared in GSTR 1 and not declared in 3B. So I have filed GST 1 wherein I have declared that the outward supply of XYZ amount is done. However, that is not included in GST 3B. So that is not being allowed. So recovery can be initiated only on the basis of filing GSTR 1. So there will be a reconciliation of GSTR 1 and GSTR 3B. Something which is in GSTR 1 and not in 3B, this is also a point of the recovery for the government. Provisional attachment scope has been expanded to include many other things, which includes assessments, inspection of goods, search and seizures, arrest, and demand and recovery. Pre-deposit for appeal filing. So earlier there was no mention that you do deposit certain amount. Now it says that you do deposit 25% of the penalty to be deposited in case of the detention and seizure of goods and conveyance during transit. The penalty on seizure and confiscation of goods and conveyance in transit. Now, in case if the owner wishes to make payment, that penalty was earlier 100%. Now that penalty has been increased to 200%. So even though owner wants to make payment, the penalty amount is increased to 200% of the tax which is leviable on that in case of these cases. Now coming to the last particular point and is on relaxation for companies LLPs. Now this is not exactly as per as the income tax or GST proposal is concerned. How it was covered as a part of the other proposals and speech, which says that the for 1% company earlier if they exceed certain limit, then they need to convert themselves to a company compulsory. Note that there is no restrictions as far as the capital or turnover is concerned. Even if your turnover exceeds the limit which is specified earlier, you can still be OPC 1% company, and you can convert to any type of the company at any time. So that was one very important thing changes which has been proposed here. The small company definitions has been increased. Now what happens that once the small company definition has been increased for turnover from 2 crore to 20 crore and paid up capital limit from 50 lakhs to 2 crore rupees. So now the all companies having turnover up to 20 crore rupees and paid up capital up to 2 crores, they are called small companies. So a lot of relaxations were there, exemptions were there for small company. They will also be applicable for the larger number of companies covered under a small company. And last point is on decrements of LLP. Under Companies Act 2013, there are certain procedural matters which has been taken as a criminal provision. Now this has been decriminalized last year. On the same basis, the government intends to decriminalize certain procedural lapses under LLP also. So this is also going to happen in the future. So as far as the provisions of companies or LLP is concerned, it has been more relaxed compared to earlier, and it just provides a way that yes, you can think of having your own company or LLP, and If you are a small company, you can still enjoy a lot of relaxations and exemptions which are being granted to you over this period. Now, this is what is a snapshot summary of the whole. There are many other changes which may be the part of the budget, but however, due to short of positive time, I covered the very, very important point which I feel are critical for businesses. And when you look at these changes, it gives a one feeling that the government doesn't want to charge or levy higher taxes. However, they want to be very strict as far as the non-compliance or EVOS is concerned. In many ways, the procedure things are going to be more smooth and relaxed over the period, as a digital is the way next time. So I hope that this will be useful to you. If you have any questions, yes, I'm available here, and I will definitely be more than happy to respond to your questions after these sessions. Thank you so much, everyone, for spending your valuable time. Thanks, Zoho. Thank you.
Hello, everyone. I hope the session was informational and useful. Right now, Mr. Chintan Patel will answer the questions that you have. I'll be transferring the session details, session control to him, and he will project the questions and he'll answer to those questions.
Yeah, thank you so much, everyone. I think when I look at your questions window, it seems that you all have been very much interested in the budget speech. So let me just first look at the questions. Saurav Kumar has asked question about how much TDS will be applicable if company make the transaction to any vendor amount is 45,000 rupees. Saurav Kumar, which I understand that you are talking about the questions of filing right higher TDS rate, right? So for higher TDS rate, this is applicable only when the amount is 50,000 rupees or more. I think in your case you are saying 45,000 rupees. So basically that means in that case what will happen, that it is not applicable 50,000 rupees if in last 2 years continuously 50,000 rupees is there, then only you are required to look at the filing of ITR not. Otherwise, it is not required. Then whether it was supply of goods or services, Govardhan ji, basically that is applicable for all TDS sections. So except sections which are mentioned there, so all TDS sections like 194C, 194J, 194C talks about the TDS on contractor payment, 194J is on basically professional services. So on all these TDS sections, basically this is applicable. So except certain sections which are mentioned like TDS on employee salary, for that there's no need to worry about the ITR filing. But other than these few sections mentioned, for all TDS, wherever the TDS liability is, TDS deducted is 50,000 rupees or more for last 2 years, then you to verify whether that deductee has been filing income tax return or not. Saurav Kumarji, I think you already mentioned that basically, uh, yeah, if vendor having a personal account, so I'm not sure basically that basically vendor having personal account. If you can elaborate on your questions, I will be more than happy to respond to your question. Uh, Abri Abi has basically mentioned the fact that what about the case where TDS is only applicable for services or not goods? It is applicable to all sections as far as 194 is mentioned. So except 182, 2A, 194B, 194 double B, LBC, or 194 N, except all these sections wherever TDS is applicable, in all these cases, irrespective of goods or services, you need to think about making the TDS. Then Venugopalanji has asked question: will there be an API in the portal for checking compliance? Won't be possible to manually check every PAN. Yes, I think your question is a very appropriate question. Let's hope that how government responds. I am very much sure that there need to be a more smooth application as far as verification of PAN is concerned, because what you're saying is correctly. Sometimes you may be required to look at and check for many deductees, and where the amount for each deductee is 50,000 rupees or more, in that case, possibly there may be some provision, there may be some provision by government wherein you can check bulk verifications smoothly. So let us look at how the government responds to these particular situations, how and which kind of facilities provide to us. But I'm sure that it won't be a difficult one. It will be a smooth one to ensure the compliance of these provisions. Uh, Fine. Saurav Kumarji, yeah, Saurav Kumarji, you have been very, very active. As I understand, many questions you have asked. So, my vendor is providing the storage warehouse to my company. Basically, if section 194I rent, if the rent has been charged for that, in that case, yes, you need to look at the payment deduction of 50,000 rupees TDS. And if it is more than 50,000 rupees TDS for 2 years, in that case, you have to basically look at whether he has filed ITR or not. Vinayak Dubey ji has asked question that is it applicable from 1st April 2021? Vinayji, all are having a different dates as far as the this higher TCS is concerned for non-filing of ITR. The applicable TDS date is 1st July 2021. But yes, there are different basically there are different dates for various provisions. Lavinaji mentions is the provision is confusing. Yes, I agree, Lavinaji, because what happens that this particular thing is a new one, and TDS, TCS are there in many sections. So now there are a lot of things you have to look at whether you are required to cover on purchase, sale, then sections of filing of returns by deductee. So many things are there, but yes, I'm sure that over the period it will be smooth. Jayashree Srivanas, she has mentioned the fact that we are a subsidiary of a foreign company and filed LUT for GST exemption. Annual turnover is 1.8 crore. Should I charge any TCS or TDS for the sales invoice? Madam, basically, this TDS, TCS provisions for sale or purchase is applicable only where you are having a turnover of 10 crores or more. So if the turnover is not 10 crore or more, then that provision is not applicable. Right. Now, who will deduct the TDS, whether buyer or supplier? Shivana ji, basically, it will be done by buyer or or supplier. In the both cases, whoever is having a turnover more than 10 crore. As far as the budget provision is concerned, the new budget provision basically focuses the things that it is on purchase. So basically, if you purchase the goods, right, from a one particular supplier where the amount is 50 lakhs rupees or more, and your turnover is more than 10 crore, then the purchaser, the buyer has to do TDS. That is a new section introduced by budget. As far as the old section is concerned, TCS on sale of goods, that is on the basically on selling. So when you sell the goods, it is applicable for collection of the tax. And this new provision is for the companies who are purchasing goods from the supplier and the worth of goods is 50 lakhs rupees or more from a single party. Vikash Kumarji has asked, can I take benefit of TCS amount? Vikash ji, basically, yes, if the TCS has been collected from you, you can get the benefit, you can get the deductions in your income tax return. Jayashree, madam has asked, is there any exemption for a foreign subsidiary incorporated in April 2020? There is no specific exemption in budget for any company incorporated in particular period. Yes, however, if a company qualifies to be a startup, then there are benefits for startup is available. Uh, Else, there is no specific exemptions, relaxations provided for a foreign company which is incorporated recently in April 20. What about 2.5 lakh PF? Chetanji, yes, 2.5 lakhs PF, it is primarily with respect to a case where employees provident fund. If the contribution by employee to the employees provident fund is more than 2.5 lakhs rupees, in that case, for excess amount more than 2.5 lakhs rupees, the interest is a taxable. So the purpose of the said provision which was introduced is that there are a lot of employees which are HNIs. They have been depositing in PF and it was tax free. So just to ensure that the right persons within the limit get the exemption limit, so they mentioned that more than 2.5 lakhs rupees, if any employees contribute excess amount more than 2.5, interest thereon won't be tax free, it will be taxable. Uh, Ankita has asked question, if we have delayed filing 3B and our ITC is more than output tax, there won't be a cash liability. So in this case, we don't need to pay tax. Is this correct? Uh, Ankita, there has been a lot of dispute regarding two things. One, which I mentioned that basically that you have to pay interest only on net liability. However, how to compute net liability? Even though you are having a lot of ITC available, the government may say that you not claim ITC. If the ITC originated in the same month and your outward supply originated in the same month and they both have not been done, matter is very clear. You are not required to worry. You can, if your ITC for that particular month is higher than the outward tax, you don't have to pay interest because net liability is zero. However, if you have already ITC balance available of earlier months, it is still under a dispute. And from when will all these GST amendments come to effect? Ankita ji, yes, we need to really look at, there are different dates are there. But yes, for example, I'm sure that it will be from 1st April in certain cases. In certain cases, it is retrospective. Like in case of net interest liability, it is retrospective from 1st July 2017. So we need to look at every amendment per se to understand from which it is effective. Trupti, maximum amount which can be contributed by employee to government PF. Uh, yes, so employee can basically contribute up to 2.5 lakh rupees per year. So up to 2.5 lakhs rupees per year, there is no issue on that. And so there are basically three kinds of provident fund. One is the employees related. Second is the recognized. Third is unrecognized, and last is PPF. So I'm not talking about a PPF. I'm talking about the case where the employee is making contribution for a recognized provident fund. For that, annual 2.5 lakhs rupees is a limit. Beyond that, you will contribute, but it won't be tax free. If your company's turnover is less than 10 crore, then TDS will be applicable on purchase of 50 lakhs from a single vendor. No, Anilji, if your turnover is less than 10 crore, in that case, you are not required to look at TDS provisions. However, if you're being, if you're selling, like if you are basically the person so for example, if you are buying and the person who is selling to you, if that person is having a more than 10 crore, then that seller may do TCS. But in your case, if your turnover is less than 10 crores rupees, you are not required to worry about TDS provisions, which is recently introduced in budget. Anil ji mentioned trading of recharge vouchers, mobile and DTH. Amazon vouchers falls under goods or services or others. Anil ji, I think I need to. This is not something flowing from budget, but I need to check it out because this is not a very clearly response available for these mobile and DTH vouchers. But in my view, it seems to be services. But yes, we need to look at the HSN code summary. Then only we can arrive at the right conclusion. Have not touched upon interest on PEF. Uh, yes, Mohammed ji, basically I have not touched upon because the primarily it was focused on the businesses. However, yes, I have mentioned these provisions recently as somebody's asked questions on PF. So if it is more than 2.5 lakhs rupees, then excess on excess amount, whatever interest is there on that, it is not tax free. It is taxable. I hope Mohammed ji and everybody, these questions are helpful. This response is helpful to you. Isn't it that instead of making GST era smoother, they are making it even more complicated? Vikas ji, your question, your answer is basically maybe I think we all have to wait for this how it happens. But over the period, when you look at from July 2017 till today, there has been a lot of changes out there, and the changes are in the shape where it has been smooth over the period. When the change happens, it may looks complex, it may looks complicated, but I'm sure that over the period it will be more smooth. But to just wait, the time is the most important solution at this juncture. Anilji, my other question is our company's turnover is less than 10 crore, tax audit is not applicable. Anilji, yes, it is not applicable, but with the condition that not more than 5% your cash receipt or payment. If both cash receipt and payments are not more than 5% of total receipt and payment, then yes, it is not applicable. Mamta ji asked question, if a company failed to deposit the employee's provident fund contribution on time, whether expenditure is disallowed by 30%. Madam, expenditure is disallowed 100%. So 30% or 25%, whatever will be your tax rate, that is applicable and it is going to be hit to you because expenditure is disallowed. So there will be issues regarding taxation concern. 100% expenditure will be disallowed. Sharda Priya has asked question. Can you please let us know the important takeaways from this budget for MSMEs? Yeah, basically, if you just talk about important takeaways, one thing is that relaxations from tax audit, relaxation from GST, relaxation from small medium sized company SME definition. If you're a company, and then SME definition has been more relaxed. So these three relaxations are there. As far as the fourth one is concerned, it is about constituting the Deposit Resolution Committee (DRC) for small assesses, wherein the small litigations can be done by committee. There is no need to go through the various other requirements, and then basically you will be out of these things. So these are the few things which I feel very important for SMEs. And if you see turnover 10 crore is basically SME. If it is more than 10 crore is also still SME. Then there is additional requirement for TDS, additional requirements of looking at the PE, where the PE deducts TDS is more than 50,000 rupees for last 2 years. Gomti, TCS applicable if our turnover more than 10 crore for previous year, financial year 1920, and sold goods to customer more than 50 lakhs rupees. Yeah, Gomti basically TCS is in case of sale of goods that was already there in the last year. So that is not a part of budget. So yes, but TCS for TCS, it was a case where if your turnover is more than 10 crore in the previous year, then and if you sell the goods to customer and to a particular customer, the sale of good is more than 50 lakhs rupees, then yes, TCS is applicable. But the provision which is added here is on TDS. I hope that TDS and TCS both provisions are clear to all of you because there is a lot of discussion we've done on this aspect. Uh, Sushmita ji has asked question, can you give one example on interest on loan for housing? Please explain the scenario with one example. Sushmita ji, basically, this is a case where if you taken housing loan and the interest on housing loan is basically up to 1.5 lakhs rupees. So up to 1.5 lakhs rupees, if your interest is there, you can get deductions. So example, first you need to look at the conditions. Are you eligible? For eligibility, the conditions are provided where it mentions that you don't have house property today. Second thing, you take the loan during the period which is mentioned. Third thing is that the stamp duty value is up to or less than 45 lakhs rupees. So the conditions, if you fulfill, then you are eligible. And in that case, the interest on loan per year 1.5 lakhs rupees, if up to 1.5 lakhs rupees if interest you incurred on the loan taken for that particular house, in that case you can get a deduction. We are a private limited company and TDS other than salary for 1819 is still not paid and return are filed. do we come under high TDS slab rate? Uh, Namburuji, if you look at the provisions of TDS, as I mentioned that in case the TDS is done by the company where the amount for last 2 years is of 50,000 rupees or more, and in all sections except certain sections, if the ITR is not filed, then higher TDS rate is applicable. But it is not including employees TDS. TDS on salary is not included. So in your case, I understand that you say TDS other than salary. Yeah. So TDS other than salary is still not paid and return are filed. Do we come under high TDS slab rates? So I think this is a provision where it is not filing of TDS return. If your company has done TDS for other than salary and TDS is made of the deductee and the amount of TDS is with 50,000 or more for last 2 years and deductee has not filed. It is not our filing of TDS return, but deductee, the person of which you are deducting TDS, that deductee has not filed income tax return for last 2 years. In that case, this requires a higher TDS amount. It is not talking about the TDS return filing. It is talking about income tax return filing of the deductees and from the current year. I hope, Namburuji, my response is clear to you. Jayshri, yes, thank you, Jay. I thought if it's a foreign subsidiary, it is not considered as an Indian startup. Do you say there is a chance that subsidiary of a US company can also be classified as startup in some condition? Yes, Jayshri, madam, we need to look at that definition because with startup condition, the second thing is that you have to get the certificate from DIPP. So if the departmental of the innovation promotion, if they provide you a startup certificate which qualifies as per the guidelines of DIPP, then yes, you can get the startup registration certificate. Suresh Ameria, in case of interest of EPFO, Employees Provident Fund, will EPFO deduct TDS in such interest? Basically, that is not being mentioned here. There is no provision of doing TDS by EPFO. The provision here which is mentioned is that it will be taxable. So taxable will be in the hand of the employee, and then employee when file income tax return, at that time employee has to basically compute and pay tax on the excess amount more than 2.5 lakhs rupees. uh, Dwarkanath Sundarji, we are a tech startup incorporated as a private limited company in 2016. How can we apply for the startup exemption? Dwarkanath, basically, if you look at, there is a separate provision for that. Just on Google, you search DIPP startup certificate, and you will find the link where there's online application is required to be made. And once you make online applications, you provide submit the proof and documentations which they required. They will evaluate your provision, they will evaluate your applications, and if they feel that you are find fit for the startup applications, you can register. Yeah, Sauravji, raw material imported but ITC paid or not coming in GSTR 2B. I think your question doesn't seems to be pertaining to anything on budget, or I'm not sure about what exactly you are asking. Raw material imported, but ITC paid are not coming in GSTR 2B. See, basically, I think as I understand that you imported, you have paid input tax credit. It is not coming on 3B, or I think GST 3B. Okay, GST 2B. So I'm not exactly sure about Saurabhji what question you're asking. Maybe we can take it later on this aspect. In case of interest on PF, will PF deduct TDS on such interest? Suresh, yes, as I mentioned that there is no specific provision on TDS deduction by PF, but there will be a liability cast upon on the employee to offer it is an ITR, and then they have to pay tax on that. Raja Shekharji, we are supplying warranties services for computer hardware. The customer is deducting TDS for all transactions. Do we need to collect TCS? Whenever TDS is deducted, TCS is not required. Is this understanding correct? Yes, first, let me reply to your first question. The customer is deducting TDS for all transactions. Do we need to collect TCS? TCS is required to be collected provided your turnover is more than 10 crore rupees and the amount of your sale to a particular customer is more than 50 lakhs rupees. If these both conditions are fulfilled, then yes, you are supposed to look at TCS record provisions. Second questions, whenever TDS is deducted. So yes, if the TDS is deducted under section 194Q, which has been new provisions, then TCS is not required to be done for this case, but TDS under new section. Uh, Sushmita ji mentioned the case that we have paid GST on purchase of goods or services, but the vendor has failed to file the return and GST amount is not updated in GSTR 2A. How can we claim ITC? Okay, so the provision is very clear that you can claim input tax credit only when it is reflected and GSTR 1 is filed. So as I understand that the vendor has not filed GSTR 1 and is not reflected. So as per the new provision, you have to wait, you have to follow up vendor and you have to make him compel that he has to file GSTR return. Because government is very clear that unless until we receive the credit, I cannot pass on credit to you. So your vendor need to file and make payment to the government. Rafiq ji, what about TCS? Rafiq ji, yes, I think I mentioned earlier about this thing. TCS on sale of goods is already there last year. On the same basis, TDS has been created. If the TDS is done as per new provisions, then TCS is not to be done. Anything on equalization tax for benefit of all? I think Mohammed that is not something which is very, very common. So I'm skipping these particular questions. Vinayak Dubeji, my company is a foreign subsidiary and crossed 10 crore turnover this month. Fine. And we purchase from various vendors above 50 lakhs individually annually. From which date I need to deduct TDS from April? Let me just look at the date. The date is from 1st July 2021. However, I need to be very sure about this provision again. Let me see that this is applicable from 1st July 2021. Yes, Vinayakji, from 1st July 2021, this is applicable. And as your turnover is crossing 10 crore rupees in the year 2021, then from 1st July 2021 onwards, you are covered under these provisions. If there is excess GST Senvet credit for a company having both export and domestic income, can refund be claimed online or is it manual process? Anila ji, I'm not, I'm restricting myself only to the budget related questions. I'm not going further on normal questions because of time positive. We are already late by 15 minutes. Do we have to file GST 9C for 1920? Sushmita ji, yes. Government has made clarified by Twitter that for 1920 GST 9C need to be filed. Divyansh, for interest on about 2.5 uh, amount, we need to check year wise or we need to check on agreed basis. It is year wise. So for 1 year, if it is exceeding 2.5 on amount excess of 2.5, interest is chargeable year wise. Shivana ji, basically, we are an importer. We are paying more than 10 lakhs IGST to customs, but it is not reflecting in the GST 2A. How to take the IT's input? We have the supporting documents like bill of entry. See, earlier, based on bill of entry, based on invoice documents, everything was being done. But now the law is very clear. Law says that you cannot claim input tax credit more than 10%, more than 5% from January, And after this budget is approved, you cannot claim ITC unless that is reflected and GSTR one is filed. So here basically you have to wait, and you have to see that your input tax credit claiming should not exceed more than 5% right now, till the time this budget is passed. Once budget is passed, then as per the new budget provisions, unless until it is reflected, you cannot claim. Uh, Thanks for oh yeah, Namburaj, it's my pleasure to have. It's really yeah, and Manohara ji, where should I get the details regarding the startup registrations? When and how, if you can explain, it will be useful. Yeah, Manohara ji, yes, you can look at and search on Google. I'm 100% sure you will find. You search DIPP, DIPP startup registration, and I'm sure that you will find the government website which will mention the procedure for applying for startup. Online application is there. You do just provide your documentations, and then it will be useful. You can go through. They will evaluate the applications. If everything is correct, they will give you approval. So, Vinayak ji, oh, fine. Thank you so much. And my thanks to each one of you. It is really pleasure for me that you all have been there, and the way you have responded, the way you ask questions, it means that you have been really interested, inclined with respect to this presentation. So again, thanks to each one of you for your time, because yes, listen, till you ask me question doesn't give me also value. I also feel privileged to answer to your response. Thank you once again. Now I hand over charge to uh, Sami.
Thank you, Chintan. Thank you for taking the time to answer each and every question patiently. And thank you to all the people who attended the session. Like I said earlier during the starting of the session, I'll be sharing the slide presentation and the recording to you via email in another 3 to 4 working days. Thanks again. Take care and stay safe. I'm closing the session here.